Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern, yet again, as it is every day. It's it's Thursday, the 19th of January, 2017. Again, and as always, I really appreciate you joining in and being part of this conversation about trading every morning. This is another Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The overnight session has been interesting. We've had a pretty much sideways movement until the European markets opened, and the market has moved around a little bit due to the ECB announcement. Um, the Fed's chairman Janet Yellen yesterday at the Commonwealth Club in San Francisco said that the Fed expects to hike rates a few times this year. She says now it's fair to say the economy is near maximum employment and inflation is moving towards our goal. The ECB released its vote this morning, and it looks like it held steady. The ECB left the 7-day refi rate unchanged at 0%, the deposit facility rate unchanged at negative 0.4%, and the marginal lending facility unchanged at 0.25%, maintains $80 billion per month in asset purchases through March 2017, and then dropping to 60 billion from April to December 2017. Caution though, Draghi has been speaking and still is. Also this morning, initial claims came out at 234,000 versus 252, better. Continuing claims at 2.05 versus 2.08 in the U.S., also better. Housing starts released at 1.226 million units versus 1.188, so slightly higher. And then also Philly Fed came out about a half hour ago, which was expected at 15.3, came in at 23.6. Strong Philly Fed release, causing a small pop in the market. ECB's Draghi reiterates that the view that interest rates are to stay low or lower for an extended period of time. The euro responded with a nice drop there. Inflation has increased lately, but underlying measures remain subdued. Draghi also says he has not discussed reducing stimulus at today's meeting, so no tapering expected ahead of the schedule. Inflation has to be sustained for the whole euro area. The fact that they have Brexit also becoming more and more of an issue. My belief is that the ECB is likely to remain accommodative for an extended period of time, just like the Fed has. So that's what we've had. The other news, again out of Europe, France's Marine Le Pen has 26% support, putting her ahead of François Fillon, who is her Republican opponent. Le Pen is more of a populist, and that race might have an impact on geopolitics in Europe as well. Goldman Sachs is cutting 3,000 jobs as a result of Brexit. As far as what we're expecting for today, so we've spent what 3 minutes on that. As far as what we're expecting for today, we're looking for EIA Nat Gas at 10:30 Eastern. Then we're looking for crude oil inventories because we had a holiday on Monday here in the U.S. Crude oil automatically shifts to 11 o'clock on Thursday. We're expecting 2.25 million barrels. The last release on that's gasoline. The last release on gasoline came in at 5.023. Also, the last release on crude oil was a 4.097 million barrels. Today, we're expecting a deficit of 1 million barrels for crude, plus 250,000 for distillates, and 2.25 million for gasoline inventories. So we went from a very large surplus last week to the expectation of a deficit on crude. As far as speakers looking ahead, today. There's really nobody. ECB's Kerr is speaking at 6 o'clock Eastern this evening. I doubt that it'll affect us at all. And the auctions, there's only a 1 o'clock. There's the 11 o'clock announcements for the 2, 5, and 7-year notes, and there's a 10-year TIPS reopen at 1. Okay, let's move on to yesterday. So, um, let's see. Yesterday, the primary expectation, because of where we were opening, we were trading against the point of control, the MC point of control. I'm going to take 3-4 minutes today to show you how that has formed and why it's important to keep an eye on what the profile is doing. You can use a profile or a volume profile or a market profile, but I'll show you how it kind of comes together and why it's important to know, to recognize where we are versus where the overall auction has occurred, so that you can temper your excitement about what to expect from the market. We are completely imbalanced, but yesterday the expectation, there was a, in my opinion, a pretty high probability that the market is likely to break higher towards 70.25, because we've been compressing for a fair amount of time now, for over a week. The expectation is we would push at least through to 70 quarter, and then through the prior day's high back here, to start using some of this energy to the upside, which is what's most likely. So if you look at a daily chart, you'll see that we are really in a flag formation from the November rally, and this is likely to break to the upside, of course, barring any news. Also, tomorrow's the inauguration of Donald Trump. It's his first day as president, and who knows what'll happen after that. So there's a bit of that coming into the market. The market is in a holding pattern, and is circling around, waiting for more news to price in. But the primary hypothesis was for higher, and that has failed. Did not play at all. Yes, the secondary hypothesis is, if we do push higher and get to 70 and a quarter, my plan was to wait for it to get to 70 and a quarter and look for areas to push against on the short side, and look to sell back into the range. We just never got that. So neither one of the key plans, what ended up happening yesterday was hypo 3, which I didn't put up. We ended up just sitting sideways. So this is what yesterday looked like. The market dipped a lot lower than expected. The way the overnight session was forming, and the way things were setting up, it looked like it was likely to resolve itself to the upside, because later in the overnight session yesterday, the market was what looked like it did not complete the up move, and so on the open we had an open auction. Why? Because we had a pullback. You can see that the delta down here, right down here, didn't go anywhere. It was sitting around the zero line, up and down. Excuse me. And then the seller stepped in and gave us a really good rotation down, but on the way down there were indications on my order flow chart that this was being bought up on the way down, especially around the point of control. Looked like somebody was taking advantage of these lower prices. As soon as we moved back above the mid, the move down was canceled. I did not expect an impulse down, and it just sat sideways for a while. I'm going to be honest with you here. I've been trading for a long time, and I've seen a variety of markets so far. I don't know everything, and I know that I don't know everything, so I'm always open to what's next. However, it's days like yesterday are really difficult to trade unless you look to scalp, and it's not advisable to scalp for several reasons. But it's if you're finding that you're staring at the market and just not finding your spots, and you're getting this urgency to kind of force trades, don't. It's not just you. It's the market is really log jammed. We're back to where we were pre-September where it's not really directional. So all we accomplished yesterday is the biggest accomplishment yesterday is we tested the prior day's high by a tick and we closed right up there. And currently we're up against the 65.75. Yet again, we are opening against that MC point of control, which means that the market again is in a holding pattern and waiting and steadily waiting for more input. So the ECB couldn't rattle this thing out of its cage because the ECB did what the market has already expected. So the overnight session didn't accomplish anything. We have another session that's just sideways, and so it's really more of the same. Here's your overnight session. We open, we test higher immediately. We finished near the top, and so this rotation, this push up, got its continuation move up to 68 and a quarter, and then it just drifted down and sideways until the European Open over here, where we dipped down, and now we're back up at 7:30. We pushed higher on the initial claims, the better initial claims, and Philly Fed numbers. And here we sit in this kind of a cup and handle formation where we're just waiting for something to move us along. So on the open, we're looking for again open auction. The overall pattern overnight. And what happened to my info box here? Interesting. So we have 115,000 contracts traded in the overnight session. Also, the volume yesterday was fairly light, 952,000 versus 1.1 million. Again, we're in a holding pattern. So the thing I wanted to cover with you here is just a quick run for those who are not familiar with market profile. These are market profile boxes. When I zoom in, they turn into letters. Each letter is called a TPO, a time price opportunity. This dates back to Peter Stadelmeyer's invention of organizing the market statistically into histograms. And what you have on the right, the bars on the right, let me change the color of my pen here. The bars on the right are represent volume. So this represents time. Okay, that profile represents time, and the profile on the right represents volume. You can see how volume is much more detailed than time is. We could see in this profile that even though we didn't spend much time at the top, we did a lot of volume, and so the expectation was for us to continue higher overnight, and we did. But here's what I'd like to do. I'd like to show you how compressed the market is. So I'm going to merge these profiles to the right, and you're going to see where the volume is, where the time has been spent, which is where the volume has been spent. Okay, so as we merge these RTH only profiles, these are day session only profiles together, you'll see how consolidated the market has been. And why is this important? Why do you care? You're just looking for the next trade. The reason you care is because we are generally just compressing. We continue to compress. Look at how prominent this profile is becoming. There's a high kurtosis there. It is really, really ripe for a move. And so the day this moves away, when this starts to move away, there's a lot of energy that's likely to get dissipated. Here we are going all the way back to the end of December, right? These are daily profiles, and there it is. We're back to right up against the 2265 point of control. We love this area. The market just sees this area as very fair and continues to trade it. So this is why this 2265 has been key, and we are opening up against it today as we have in the last few days. We didn't accomplish much at all. So you can see as we fill in this profile, that point of control is super prominent and it's not shifting at all. We're not building anything anywhere. So if I continue to include these, all they're going to do is fill in the volume down here, but overall, it is very clear where we're spending our time. Okay. The second thing I'd like you to notice is look at these colors, and when you look at uh, the time that we're spending, the time we're spending in what period, it is very consolidated. Yellow represents um, a certain day of the week. It looks like yellow represents what is that? The Thursday or something. Um, and you could see that repeatedly we spend our time, we spend those days in kind of the same prices as you see here. We just keep replaying over and over and over what we've been doing. And the biggest thing to walk away with this little exercise that I'm doing here is how much energy is built up here. Why do I call it energy? Why am I bringing physics into trading? Is because trading is like energy. There's a consolidation, there's compression, there's like a, you know, just like a volcano, there's a lot of heat and a lot of pressure, a lot of movement underground, and eventually the volcano finds a path, a tunnel to the opening at the top, and then an explosion happens in the form of a trend day. And the more compression there is, the more consolidation there is in the bigger picture, what I call the MC, the micro composite here. When I combine these days, the more compression, the bigger the move. So my point is, once the market starts moving away from here, it could run for a fair amount, and my expectation is to the upside. Anyway, back to our, so that's a quick crash course there. Um, I'm actually out of time. Back to our hypos for today. Uh, Nothing new. Again, I'm looking for the market to open up. It's very crowded in here. I'm looking for the market to open up. We're at 2265.75. I'm looking for it to open up, open auction, dip, find a base, and then start to move up. Just again, hypo one. And if we do catch a drift, then it might actually push up to the target that I've had all week, which is 2270.25. Guess what the secondary hypothesis is? Yes, it's the same as yesterday. It starts opening and it pushes up immediately, finds its sellers, and moves back to 65 again. Although there's less of a chance that hypo 2 is going to happen because as we compress more and more, there's less of a chance of coming back here. Okay, so that's it. I'll leave you with that. That's what I had for you for today. Good luck today. Again, I want to remind you on Tuesday we're doing an order flow and market depth or depth of market webinar. You'll get a link to that, and if you want to make sure you get it, make sure you hit the link to join the mailing list in the description of the video. Good luck.